Next, we will discuss special journals. A special journal is useful in the manual accounting system to reduce the tedious task of recording both the debit and credit account names and the amounts. Please note that we will only be using special journals here in Chapter 7. After Chapter 7, we will be journalizing the way we've been all semester long. This is because the benefits of using the special journal instead of the general regular journal for the repetitive transactions have been kind of eliminated with today's technology of accounting software. For example, when you put a sale in, all of the accounts would automatically be updated. The ledger accounts and the subsidiary accounts would be automatic, where in cases of doing everything by hand, manual, you would have to do it all yourself, which this is very helpful for, but a lot of people really aren't doing that. Let's say you open your own little business and you don't feel like paying for QuickBooks or any of the other software. You just want to do things in Excel or by hand. And I do have clients who do things by hand in an Excel. Then this would be something that's more appropriate. So this still is very beneficial to learn, but I believe in the future it will become obsolete and outdated. There are 4 special journals that we're going to be covering. The first one is the cash receipts journal. Now, cash receipts means like all the cash we're receiving. Think receipts, receiving. Everyone always thinks receipts as you're paying for something, but that's not true. A cash receipt would be receiving cash. So anytime we're receiving cash for whatever the reason, we'll go into this first special journal, the cash receipts journal. If we're receiving cash because we made a sale, if someone owed us money and they're paying us, if we sold a building or a piece of land, anytime we're receiving cash, it will go here, regardless of the reason. On the other hand, the second special journal would be the cash disbursements. These are the cash payments. So sometimes it's also called the cash payments journal. All cash paid regardless of the reason, whether we're purchasing supplies, whether we're paying off debt, paying for an expense, buying a car, it doesn't matter. If we're paying cash, it's going to go into the cash disbursements journal. The third journal we have is the sales journal. This is non-cash. So the next 2 we're going to talk about are non-cash because the first and second one are the cash ones. So these are sales on account. Sales of merchandise on account. Like I said, if we make a sale and it's cash, it's going to go into the cash receipts one. So this is a sale on account. The fourth special journal would be the purchases journal. All purchases on account. So if we make a purchase and it's cash, it will go into the cash disbursements journal. But if we make a purchase on account, it's going to go into the purchases journal. So that's the main difference between these. We have the cash ones and then we have the non-cash ones. There's going to be times where we're going to have transactions that don't fit into one of these special journals. Maybe we're correcting an entry or we're returning a purchase and it didn't involve cash. Then we would just put this into the general journal. This means that we still have our regular journal. We just have these 4 on the side. We still have our regular journal for all the transactions that don't fit into one of these special journals. Therefore, we really have 5 journals. 4 of them are special and 1 of them is regular. Please follow along with your classwork. This is problem number 2. We have Wilcox Electronics uses a sales journal, the purchases journal, cash receipts, and cash disbursements journal, and the regular general journal as well. Wilcox recently completed the following transactions. Identify which journal it should be recorded in. This should really be your first step anytime you do a problem where you have to use a special journal. The first thing to do is ask yourself, which journal would it belong in? If it's cash, it's going to go into one of the 2 cash ones, cash receipts or disbursements. If it's non-cash, it would either be the sales or purchases. If it's not a sale or purchase, then the final one by default would be the general journal. For part A, sold merchandise on credit. Is there cash involved? No, because it says on credit. And we sold merchandise. It was a sale. Therefore, it would be the sales journal. I always ask myself, is it cash first? If so, I go into one of the cash ones and I just stop there. If not, I'll move down to the rest of them. Part B, purchase shop supplies on credit. Now it says on credit, so would that be cash? No, it would not be cash. Then we would move down to one of the other ones, the sales or purchases. Is it a sale or purchase? It says purchased, so we will put it into the purchases journal. C, paid an employee's salary in cash. Does it involve cash? Yes, it does. It says in cash. Are we receiving the cash or are we paying the cash? It says that we paid it. Therefore, if we paid it, it would be the cash disbursements journal. Borrowed cash from the bank. Does it involve cash? Yes, it does. Are we receiving the cash or are we spending the cash? If we borrowed money from the bank, then we would be receiving the cash. Therefore, it'd be the cash receipts journal, CR. Sold merchandise for cash. Which one do you think this would belong in? Was it cash? Yes, it says it. Sold merchandise for cash. Are we receiving the cash or spending it? If we sold merchandise, then we would be receiving the cash. It would be the cash receipts journal. F, purchase merchandise on credit. Is it involving cash? No, because it says on credit. Purchase merchandise. Which account do you think that would belong in? The purchases one. Good job. Purchased inventory for cash. It involves cash. It's going to be the cash receipts or cash disbursements. And we purchased inventory. If we're buying inventory, then we're spending cash. It would be cash disbursements. H, paid cash to a creditor. Which one do you think this would be? It would be cash disbursements. I hope you got that one right. It involves cash and we're spending it. We're spending cash, so it would be cash disbursements. This really is the first step we should be doing. When we look at entries, we need to be asking ourselves, which journal does it belong in? Next, we're going to be going through the 4 different special journals individually and doing practice problems, the classwork, with each of these journals, and you can see what it looks like. I have practice problem number 3 opened right now. The easiest thing to do is to figure out which special journal these items belong to first, and then we'll be covering them individually. On April 2nd, purchased $15,300 worth of merchandise on credit. Which journal would this belong into? Does it involve cash? No, it doesn't. It's on credit, and we made a purchase, therefore this would be the purchases journal. April 3rd, sold merchandise on credit. Does it involve cash? No, we sold merchandise, therefore it would be in the sales journal. April 5th, we issued a check, which means we paid someone. So if we paid someone, it would be cash if we are issuing a check. Therefore, it would be cash disbursements. The 12th, sold merchandise on credit. It's on credit, therefore we know it's not one of the cash ones, and we sold it. It's a sale. The 13th, received payment. If we're receiving payment, which one do you think it would belong in? It would be cash receipts. The 16th, issued a check. Same thing as the 5th, we're issuing a check. If we're issuing a check, we're paying, it would be cash disbursements. What you really should do is pause this video and try to figure out what the other 3 ones would be, and then see if you are correct. On the 17th, purchased $11,500 of merchandise on credit. We made a purchase. It would be a purchase one. It wasn't cash, it was on credit. The 18th, Borrowed $73,000 cash. We borrowed cash. Does it involve cash? Yes, it does. Are we receiving it or paying it? We're receiving it. So it would be cash receipts. Lastly, on the 23rd, received an $800 credit memo from Grant Company for the return of defective merchandise. While defective merchandise, we're not getting cash here, we're getting a credit. It would not be one of the cash ones. Are we making a purchase? No. Are we making a sale? No. We did make a purchase, but we're receiving credit for returning something from the purchase. It doesn't belong into any of them. This here would go into just a regular general journal. The first journal we're going to look at is the sales journal. We'll be going over this one individually, and we'll be doing the two transactions that go here, the 3rd and the 12th. This is what the sales journal looks like. It's set up differently than what your other journals have looked like in the past. Instead of putting all the accounts along the side and then the amounts, all the accounts are listed across the top. We still have the date as our first column, account debited, invoice number, accounts receivable debit, and then sales credit all in one box, and then cost of goods sold debit and inventory credit all in one box. The sales would go here instead of listing the sale as accounts receivable and then sales separately on the left-hand side. They're across the top now. This makes it a lot easier to journalize. For example, on the 3rd, sold merchandise on credit to Paige Alastair, invoice number 760 for $5,200. The cost to us was $2,300. What this journal entry would normally look like is the following. The normal journal entry of a sale would be 4 lines. It's 2 different entries. We have on 3rd the actual sale. It's on account. It would be accounts receivable of $5,200. The credit would be sales revenue of $5,200. We have to account for the merchandise we're selling. The second entry for the same transaction would be cost of goods sold for our cost, which would be $2,300. And the credit would be merchandise inventory of $2,300. That's what it would look like. This was on your last test. It's very lengthy to do. It takes up 4 lines. Instead, the special journal makes this really easy by giving us this entry already, the 2 account names, account receivable debit, sales revenue as a credit. And it gives us this entry as well, cost of goods sold as a debit and merchandise inventory as a credit. What we need to do is really just fill in the amount. To begin, we would put April 3rd in as the date. The invoice number was 760. We'll put that here. Skip account debited for now. As you can see, here's the first entry. Accounts receivable debit, sales credit. The amount was $5,200. We didn't have to write out the account names. It was given to us already. We had $5,200 as a debit to accounts receivable and $5,200 as a credit to sales revenue. Cost of goods sold, the debit was $2,300 and inventory, the credit was $2,300. We just have to put the amount in the box, making this a lot easier. We don't have to write out all 4 lines or all the entries. We just have to put the amount in the box. Now, when it says account debited, it doesn't mean the debit like accounts receivable and cost of goods sold. That's already here. When it asks for account debited, it means who is the customer, the accounts receivable, who owes us money here, because we want to start keeping track. That's why we use the subsidiary ledgers at the beginning of this chapter, because we're going to be keeping track of these clients who owe us money separately. The person who owes us money is Paige Alastair, and we would just write that in. The next entry we'd have for the sales journal was from the 12th. Sold merchandise on credit to Paula Core, invoice 761 for 8,300. The cost is 7,600. We're going to be filling this in exactly the same way for 12. Invoice number 761. The accounts receivable debit and sales credit, that was the sale portion. That's the 8,300. The cost of goods sold debit and inventory credit was the cost to us, which is 7,600. And we just have to put the amount like that, making this journal entry so much easier to do. The account debited, who's the person, it would be Paula Core. The sales journal is one of the easier ones to do. These are the two entries that would go here. What you would do then is at the end of the month, you would total these columns, 52 plus 8,300. It would be 13,500. Let's add up the next column. 2,300 plus 7,600 would be 9,900. In real life, what you would be doing now at the end of the month is you would be going to the accounts receivable debit account to the different customers, making sure that that's posted there to those accounts. They kind of already should be. Updating the main control account. You would be posting the 13,500 as a credit to sales. You would be posting 9,900 as a debit to cost of goods sold and a credit to inventory. Instead of going into these ledger accounts every single time we had a transaction that involved it, we would just be doing it once at the end of the month. It frees up space in the ledger accounts by only having transactions posted once per month instead of constantly throughout the day. I know with this example, there's only two, but just imagine hundreds of transactions that are happening throughout the month. We would just be posting them here into this journal. Instead of going into the ledger immediately, we would just be waiting until the end of the month to do that. Next, we will discuss the purchases journal. For the purchases journal, we have the date column, the account column. Terms would be terms of the purchase if there's a discount being offered, such as 2, 10, and 30. Accounts payable will get the credit. Since this is the purchases journal, this would mean that any purchase on account would go here, which means you always have to be using the accounts payable credit column. If you're not using this column, then you're using the wrong journal. Next, we have inventory debit. We would use this if we purchase inventory on account. Inventory would get the debit, accounts payable would get the credit. Let's say we made a different purchase on account. If we used a different account besides inventory, we would just use the other accounts column instead. For example, if we bought supplies on account, we'd be using supplies as the debit, accounts payable would be the credit. We wouldn't use the inventory one. We would just write the amount here of how many supplies we purchased. And then we would also write supplies over here in the account column so that we know which account we're using. Also, the account payable, the name of the business that we owe money to, would also go into the account column. The two entries that we have listed for the purchases journal would be on April 2nd, the purchase of 15,300 of merchandise on account, and then on the 17th. Therefore, these are the two entries we're going to be putting into the purchases journal right now. Also note that the terms of all its credit sales are 2, 10, and 30. We're just going to assume it means credit sales and purchases, that there's a 2% discount if we pay in 10 days. Otherwise, there's no discount. The net amount would be due in 30 days. The first entry we have is April 2nd. Purchase $15,300 worth of merchandise on credit from Knopf Company. The normal journal entry would be an inventory debit of 15,300 and accounts payable credit of 15,300. We do not have to write the account names out because they're already listed at the top for us. We just need to put in the amounts. Inventory debit would be 15,300. We're just going to write in the amount. We do not need to write the account name. It's already there. The debit would be accounts payable credit. We're not using the other account because inventory is already listed for us. It would be if we had to use something other than inventory. The account name, it would be whoever the business is that we owe money to. In this case, it would be Knock Company. The terms I listed for you before, I showed you, it was 210 and 30. So I'm just gonna write 210, but it would be 210 and 30. And that would be it for this transaction. The next one would be on April 17th. For 17, we're just gonna do the same thing. Purchased 11,500 of merchandise on credit from Grant Company. The amount was 11,500. That would go in both these boxes because the journal entry would be a debit of 11,500 and a credit of 11,500 to inventory and accounts payable. Once again, we do not need to use the other account column because we are using inventory. The name of the company is Grant Company, and that's what we write in the first box. Now that we're all done and we're just going to assume the month is over, we have to add up both columns. The amount would be 26,800. And since both boxes have the same amounts in it, it would be the same for both columns, 26,800. This is the journal. At the end of the month, you would have to post to the ledger. The accounts payable accounts, the individual ones, should be updated as it happens. But we have to make sure that the accounts payable main control account is updated with this amount. Then we would go to inventory and we would post a debit of 26,800. Once again, this frees up the ledger. Instead of having all the different entries and transactions listed, it would just be one at the end of the month. We have nothing for the other accounts, but don't worry, we'll have an example where we use that in another one of the journals. The next journal we're going to be doing is the cash receipts journal. We have on the 13th, we received payment from Paige Alastair from the April 3rd sale, less the discount. Be mindful that here on the 3rd, we did sell merchandise to Paige Alastair, and credit terms are 210 and 30 for everyone. That was on the 3rd. It's the 13th. They did pay within 10 days. Paige owed us 5,200, but there is a discount of 2%. So keep that in mind. That was something we had to do in the last test. A lot of people did get that wrong, but just make sure you're aware of it now. The other cash receipts entry we're going to be doing is from the 18th, where we borrowed money from the First State Bank by signing a long-term note payable. These are the two we're going to put into the cash receipts journal now. This is what the cash receipts journal looks like. We have the date column, account credited, cash debit. This account always needs to be used because this is the cash receipts journal, which means we are receiving cash. If we are receiving cash, cash gets a debit. Therefore, this one always needs to be used. If for some reason you're not using this column when doing an entry, it means you're using the wrong journal. We have sales discounts as a debit, accounts receivable as a credit, sales as a credit, other accounts as a credit, and cost of goods sold and inventory in one box. We're not going to be using all these columns every time, but we would pick which one. We're definitely going to use cash debit every time. And then why are we receiving cash? What's it from? And we would pick the appropriate columns. It's really good to think about what the original journal entry would look like and then find the right columns up top. On the 13th, we received payment from Paige Alastair for the April 3rd sale less the discount. Let's just think about what this journal entry would look like normally. The date for the original transaction will be April 13th. We received a payment. Remember, cash is always getting the debit. We received money from Paige Alistair for the amount they had owed from the April 3rd, which I have. This is the April 3rd transaction here at the top. Paige Alistair owed us $5,200. That entire debt is going away, accounts receivable, $5,200. But Paige Alistair is not giving us $5,200. There's a discount. Remember, 2, 10, and 30. There's a 2% discount. What's the name of the discount account that we use when you make a sale? It is sales discount. 2% of $5,200 is $104. That's how much they're getting off. The cash amount would be how much Paige Alistair is really paying us. It'd be $5,200 minus 104. Therefore, it'd be $5,096 is what Paige would be giving us. This is what the normal journal entry looks like. It's lengthy. It takes up 3 lines. You have to remember all these account names. What makes the special journals easier is that all of these accounts are listed at the top. We just have to make sure we're copying what this would be. We have to make sure there's a debit to cash. We have to make sure there's a debit to sales discount, and we have to make sure there's a credit to accounts receivable. Let's put in the date of April 13th. Then let's find the 3 accounts at the top. Cash debit, sales discount gets a debit as well, and lastly, accounts receivable was the credit. These are going to be the 3 accounts we're using because they match up with what the journal entry should be. Cash had a debit of $5,096. Sales discount had a debit of $104. And accounts receivable, we had done a credit of $5,200. Like I said, we're not using all the columns, only the ones that make sense for this transaction. The amounts and the accounts do match with what the journal entry should have been. We're not making up new entries here. It really needs to match. The account credited over here would be the name of the person. In this case, it would be Paige Alistair. The next entry we have is on the 18th of April, 4/18. Borrowed $73,000 cash from First State Bank by signing a long-term note payable. What would this entry normally be? We're receiving cash. Why? Because we have a note payable of $73,000. It would be cash and then notes payable. That would be the debit and the credit. The debit of cash, $73,000, and the credit would go to notes payable instead of accounts payable. We look up top, we don't have an account that says notes payable. This means we have to use the other account. We'll be putting the $73,000 here only because we do not have a note payable account already at the top for us. In the box, we have to write in note payable so that we know what the name of the account is. Because other account is not an account name, it's just letting us know that it's another account besides the ones that are listed. So we do have to write in note payable here. Now that we're done, because there were only 2 transactions we had to do, we would add up all the columns and then post this to the ledger for these different accounts. Cash would be $78,096 when you add these 2 up. The other accounts are a little bit easier because there's only 1 entry. For instance, sales discounts is only $104. Accounts receivable is $5,200. And the other account is $73,000. We just have to make sure we post the $73,000 to the actual account notes payable. We would go into the ledger for cash, post the $78,000. We'd go to the ledger for sales discounts, and we would make sure that the accounts receivable control account ledger is also up to date. This would be the cash receipts journal. The final special journal would be the cash disbursements or cash payments journal. So I have them both listed here, cash disbursements, cash payments, because you can use them interchangeably. Some companies use one, some use the other, but it means the same thing. For the cash disbursements special journal, we have two that go here. On April 5th, issue check 588 to Knopf Company in payment of its April 2nd invoice less the discount, which means we owe them money and we are getting a discount on it. It comes from April 2nd here when we purchased $15,300 worth of merchandise. We will be getting a 2% discount. Remember what this journal normally looks like if you had to write it all out? The entry would look like this. The date would be April 5th. The debit would be accounts payable because we are paying off the debt we owe to them. We owed them $15,300 from the second. We will be paying them cash, but we will not be paying them the full $15,300 because there is a discount. Do you remember the name of the discount account when we had made a purchase? It would be the inventory account, merchandise inventory, because it offsets the cost of the goods to us. It was a 2% discount. 2% of the $15,300 is $306. Therefore, the cash that we're giving them is $15,300 minus a discount of $306. It would be $14,994. We need to put this into the special journal instead of putting it here, making this lengthy, taking up all these lines, and then updating the ledger. We're just going to instead use a special journal and making this process easier. We're going to use accounts payable. We have to make sure there's a debit there. We're going to cash to put this credit in, and then we'll look for the merchandise inventory account to put this credit in. First, let's begin by putting in the date. It was 4/5. Check number, that's easy, 588. It's listed right here for us. Let's put in these journal entries. First, we had accounts payable of a debit of $15,300. Let's look up here. Do we have accounts payable as a debit? We do right here, accounts payable debit. Let's put in our amount of $15,300. The next line I had was cash as a credit of $14,994. As a reminder, this is the cash payments journal. Therefore, this account right here, this column, cash credit, should always be used because a cash credit means that you're spending money, which means you're in the correct journal, cash payments, spending money. If you're not using this column for some reason, then it's because you're in the wrong journal. The last account I have is merchandise inventory as a credit of $306. Do we have inventory as a credit up here? We do. Inventory credit. We just write in 306. If you accidentally forget what the account would be, you can always look up top because it should be there. The payee would be Knopf Company. If that's who we're making the check out to, we'll just assume it is. Account debited, we would use account debit over here. We would write in Knopf Company once again. So a lot of times you will have the same company written in here, and sometimes you won't. If you're not using accounts payable, if you're using another account, then you'd probably have something else written in there. The last journal entry we have is from April 16th, 4/16. Issue check number 589, payable to payroll and payment of sales salaries expense for the first half of the month. Remember, you need to think about what the journal entry normally would look like. If we're paying our salaries expense in cash, it would be a debit to the sales salaries expense account and a credit to cash. Therefore, we need to make sure that we match up the appropriate account names at the top with what that journal entry would normally be. Like I said, it's normally a debit to the salaries expense account. When we look up top, do we have a sales salary expense account? We don't, so we'll have to use the other one. We'll put in the amount, $10,650, and we have to write the name of the account on the side. The account that would be debited would be the salaries expense account, or sales salaries expense. I'm just abbreviating because it's very hard to write with this. Salaries expense. That would be the debit. The credit would go to cash. And remember, we always need to use this column when using this journal. It would be $10,650. The payee would be who we're writing the check out to. It says payable to payroll. We would just write payroll here. Payroll. And then the check number would be 589. Now that we're done, we would add up the columns. When you add up the cash column, it would be $25,644. You would go into the ledger for cash and put this in as a credit. Inventory, 306. You would update that ledger account. Other accounts is the $10,650. We would make sure to look at the account on the side, which would be salaries expense, update that account. And lastly, accounts payable debit. We would need to make sure the subsidiary ledger account for North is updated, and then the control account is also updated. Those are the 4 special journals. We also have one other entry that we need to journalize. On the 23rd, we have an entry that goes to the general journal. Remember, the general journal is normal, just like you've been doing all semester. The debits and credits are on the separate lines. We received an $800 credit memo from Grant Company for the return of defective merchandise on April 17th. We need to put this return in, and we're going to do it into the general journal. In the general journal, the date would be the 23rd. When we originally made the purchase from Grant Company, it was merchandise inventory as our debit and accounts payable as our credit. Since we're returning it, we would just reverse the 2 accounts, do them opposite. Instead of owing them so much money, now it's $800 less. Instead of having inventory we can sell, we now have $800 less of that inventory, and we have to get rid of it. To get rid of the accounts payable credit we have, we would do a debit for that. Accounts payable, it was Grant Company. It's a good habit to start writing out the names of the people now, since it'll be going to the subsidiary ledger. Instead of inventory being the debit, inventory will now be the credit because we're getting rid of it. And it was for $800. There is nothing special about this journal. It is done exactly as you normally would. There's so many times I see students put an entry into the general journal and they're trying to combine the lines, put everything onto one line like the special journals, but that's not the case. This is 100% normal.